Morning, guys. It's just Ken back with another weekly fundamental analysis, as well as a bit of breakdown about what's going on in the market. So we'll kick it off right now with the fundamental analysis for the week. So this will be the 29th of June to the 5th of July. As per usual, guys, this is not financial advice. This is purely for entertainment purposes only. Please do your own research and make sure you guys are well informed when putting your money where your mouth is in the markets. So COT reporting actually this week is delayed, so I think it will be released tomorrow. But essentially, COT reporting remains the same. We will go based off the previous reports. US data. USD data, we've got consumer confidence, a bit of economic news, a bit of labor market news. We can see we have ticked slightly less bullish, more into that neutral territory. We've got consumer confidence being bearish, we've got average hourlies being neutral, and we've got manufacturing being bearish. So a little bit of steam lost in the sort of strength of the US dollar. We do have ISM services next week, which will pretty much tick this, whether I'm bullish on the dollar into neutral, that will be dependent on next week. So really right now I'm still net bullish. I do have a couple trades in against the US dollar that I will wait for the services PMI to actually see if I will need to readjust anything. So just the FYI, a little bit of weakness there. However, labor market has been ticked more bullish actually. So we got JOLTS being bullish, we have unemployment being bullish, net bullish, and we have NFP being net bearish or cooler than expected. Now, if you guys have seen some of my previous videos in the past, that is definitely wrong, that unemployment rate. Let me just change that up. Pretty sure that was 4.2%. Let's double check. Forex Factory. Yep, cool. Sweet. So you guys know, if you have been watching some of my videos in the past, that I am heavily dictated. I think I have a bit more of a bias or a bit more of a confidence when unemployment rate is low. Even if job numbers are lower, unemployment rate, if you think about it, I believe is a bigger driving factor. So into changing of the rates. So yeah, net bullish on the labor market reporting, slightly less bullish now on the economic. We'll wait for services PMI, but still happy to trade and manage my trades with dollar strength. AU, we had household spending and trades good balance, pretty much being the inverse of the last reading. So nothing really too much to say for Aussie. I'm still net bearish on Aussie, so FYI. And yen still net bullish. We had unemployment being as expected, but still quite confident in terms of all these other readings. So still net bullish for yen. In terms of the actual graphs, we can see no change in inflation indicators, no change in economic indicators, employment indicators. We have NFP being lower than expected. Previous 3 months was higher than expected or hotter than expected, but you can see this month has dropped down quite significantly. But on the flip end, we have unemployment rate being cooler than expected, which is better for the dollar. So less unemployment percentage rate means more people are employed, more people are keeping their jobs, so that's a good thing. Unemployment as usual for yen, so nothing to comment on. So in terms of my bias, it remains exactly the same, just a little bit of weakness in the US dollar, still net bullish from what I can gather. So we're still happy to short gold, still happy to long US 30, still happy to short AU, still on the sidelines for UJ, and still happy to short AJ. So if we go, let's jump straight into the charts. This will be in another video, so this will be on another recap video, so switch over to that video. But if we go here,